very good afternoon, good morning. Welcome to the Monday Look Ahead workshop with myself, Giles Cochran, Chief Currency Analyst. Hope everybody's doing well. Looking forward to taking us through the session, getting us ready for the week. There are some interesting events. Requires a little bit of unpicking, so just going to work through that so we get a good understanding of the fundamental picture. Hope everybody is doing okay. If you can just let me know if you can see my screen and hear my voice okay, that'd be great. If you can either send a message in the chat box or the question box, that would be super so that I know that I'm coming through okay. Sometimes the tech does play up, so it's always good to be reassured that you can hear my voice and see the screen all right. Yeah, Johan, Josh, thank you very much. Much appreciated. Right, well, let's get stuck into the event. I've got to make sure I'm sharing the right screen. Okay, so for those of you who haven't attended these webinars before, the key thing to realize, the whole purpose of these webinars is you look over myself, someone with a professional trading background, you see how I make trades, how I make my trading decisions. These are not webinars that are decided to give signals, in terms of, trade this, trade that. So it's not it's a signal selling service or a trading service. It's an educational service, just to make that clear. Some people, when they first come, they get confused. Those of you who are regulars, of course, will understand. Now, key things we'll be looking at is as follows. When we're looking at the Australian dollar minutes, we're also going to be looking at wage data out of Australia this week. Probably the top trading opportunity of the week is potentially in the Aussie, so we'll just run through why that is. The pound will look at rising inflation, whether that be a concern for the Bank of England. Spoiler, they've said that they're not going to be concerned with inflation because they expect inflation to rise up to 5% in the spring of next year. They said that at their last central bank meeting. Don't forget, you can always look at my blog, which is here, and under the central bank watch section, if ever you want to get a handle on what central bank is doing, just do look at this here, and the central bank data is always up to date. I always up to date with the latest central bank decisions, so don't miss that. I sent you a link in the terminal. The US dollar, we'll be looking at how to trade the US dollar. Remember last week we had that really high CPI print from the middle of last week and how the dollar reacted to that. We'll be just unpicking that and now explaining what the big picture is. We're going to start with that because that's the best place to start. And we're running into that and potential opportunities for gold, and then looking at the New Zealand dollar with the RBNZ meeting November the 24th. A lot of upside potential for the New Zealand dollar. I'll just run through that. And that yen weakness that's also expected this time of year. So there's some, really interesting things to be looking at. So without further ado, we'll go over to some trading terminals, and I'm just going to pull up a dollar chart and just sit back as I explain what's going on. Now, here's the dollar index. Now, the dollar index moved higher last week for one simple reason. The US CPI print came in like 4.6% core reading, really high. Headline was over 6%. So what we saw was a snap reaction in the dollar, and that snap reaction in the dollar was, traders kind of panicking, saying, the Fed will have to raise interest rates more quickly. But the question is, will they? They've already said they're expecting inflation to be high. They've already said that they expect inflation to be passing. Fed's daily came out after the strong CPI data last week, and he sort of said, yes, inflation is eye-poppingly high, but it's temporary. In other words, don't panic, it's okay. So that's why I'm not convinced by this dollar move to the upside. I'm not chasing this dollar move to the upside. I think the reality is that the Fed's going to push back against interest rate hike expectations. Now, obviously, no one knows the future, so I could be wrong, of course, but that's my base case. So that's what prompted me to take a New Zealand US dollar long at the end of last week, because the RBNZ are going to be raising interest rates by 50 basis points. I think the Fed are going to push back against this. Now, we started to see a little bit of that pushback. You can see here in the dollar yen. Now, you see the 10-year yields. Now, if you're trading the dollar yen, you use the 10-year yields as a good proxy for what the dollar yen is going to do. So we saw the 10-year yields pushing higher after that high CPI print, and now pulling back a little bit. And lo and behold, look, you had a potential trend line, false break of the dollar yen, indicating potentially lower prices, particularly if the 10-year yields drop lower. Now, if you think about what's going on with the yields in the US, look, if the Fed pushed back against, they say, yes, CPI is high, yes, inflation is high, but we're still not shifting, then we expect 10-year yields to move lower. Now, if we play devil's advocate here, even if they say, okay, inflation is rising, so we're going to raise interest rates, there'll be a short-term spike higher in the 10-year yields, sure, and yields generally, but the longer end of the yield curve, the 20, 25, 30-year, should drop lower. Why? Because growth expectations should be hit. Because if interest rates are increased too early, that means recovering companies are going to have more expensive debt repayments. It means that their profitability is going to be hit. Companies' earnings will fall. They'll be able to pay less in wages. Consumers will be able to buy less, etc., etc., etc. So in other words, what I'm saying is that either way, I can see a case for yields falling. Now, what's that interesting for? Well, that's interesting for gold, right? Now, look at gold and silver. I'm going to point out a few tech for you. Now, gold, I was long sort of pre the NFP, and I've taken my first profit up at that 1860 level, right? And I'm looking potentially for a move 1900, maybe even beyond. There's some interesting tech here. We've got this rush up to the level. You've got a bar inside bar, a break high of 1870, stops below 1840, and you expect the first profit taking of 1900. So there is a technical setup there. But this is really what I want to see. If I saw weak US retail sales, that would be the trigger. Okay, weak US retail sales would be the trigger higher for this. Now, understanding gold, you need to be looking at this chart. And this chart is the interplay between real yields and the dollar. Now, what is real yields? I hear you say. Well, real yields, let me just show you here, is a bond yield minus inflation expectations. So you can see here, see this real yield here? See the way it's dropping lower? That is showing us what the real yield is, okay? Now, as that drops lower, that is market expectations that inflation is higher than yields, so real yields drop low. Now, that's an upside for gold. Now, the dollar is currently sort of been moving higher, hasn't it? Now, if the dollar starts moving lower, expect gold to rip higher and go straight up to that 1900 straight away. So what you're looking at here, what you want to see, real yields and the dollar moving together. Can you see here, like in May of 2010, you had real yields dropping and the dollar dropping, gold surging. Okay, so you can look here when you've got here, you've got the dollar dropping, but real yields remaining higher, so gold is sideways. But whenever you get like, look, real yields dropping, dollar dropping, gold surged. So at the moment we've got real yields dropping, dollar rising, but gold still surging because the real is dropping so sharply on inflation expectations. But if the dollar starts dropping, not mark this, expect gold just to fly. Okay, so look out for that. And similarly, silver. So what you're looking for here, the kind of thing we'll be looking at is like, say you got really, really weak retail sales out this week, then you'd expect silver to fly high, all right? And first target up to that sort of 26 region, and then above that up to 27, 28. So there's a lot of potential upside for gold and silver, but it's going to depend on the movement of real yields, inflation expectations, and the dollar. And as long as you understand that, you'll be fine. If you're struggling, I'll show you a link. Trading Insights. There you go. Have a look at this. 4 things to know about trading gold. I'll send you the link there. If you don't understand that, read that and it explains it. The real yields, the dollar, seasonal demand, ETF levels. They're the main things you need to know about trading gold. So now you've understood that. That's the big picture, how markets are going to respond to inflation. Now have a quick look at the week ahead. So we had retail sales good out of China, industrial production good out of China. So that's a bit of good news. That lifted the Aussie dollar. Minutes will be looked at. Now, the last RBA meeting, what the Reserve Bank of Australia did was this. They ended yield curve control in the 2024 bond. So that's hawkish. But At the same time, Governor Lowe said we don't expect to raise interest rates till 2024. So hawkish indeed, dovish in word. So markets will be looking at those monetary policy minutes for clues. You know, any other clues? What are they doing? Are they going to be more hawkish? So traders will be looking at that like a hawk. So watch out for potential movements of the Australian dollar. I'll tell you now, nothing is expected. So if there is anything unexpected, it'll have more of an impact. US dollar retail sales coming out tomorrow. Never underestimate the US consumer. It's one of those trading mantras. If this is a very poor reading, expect that the dollar to move and expect gold to surge. So that will be a potential trigger for going long on gold or silver. That's what I'm looking at. Now, expectations are, you know, that's going to come in decent, 1.12%. But if you've got disappointment, you know, some big misses, you know, anything sort of, you know, 0.6% lower, then what markets will think, oh, that weak University of Michigan sentiment we got on Friday, that the US consumer is slowing down. So what markets will be looking at is any indication that the US consumer is getting worried, slowing down, inflation is impacting the US consumer. If it is, then you can expect to see 10-year yields dropping, dollar dropping, and look for gold to surge higher alongside silver. Right? That's what to look for there. CPI, now look, expected to come 3.8%, but which is high. But the Bank of England have already said they're expecting interest rates to move up to 5% next year, around springtime. So inflation is not going to be a big surprise. If it's a big miss, then you'd expect downside in the pound. And maybe something like pounds, let's see, maybe like, just think which pair to be trading with. Maybe pound US dollar would be the simplest one. If you got you know, big miss in the CPI data, though no miss is expected at the moment. Let's just take a look at Sony Futures. I think it's this one here, Sony Futures. Yeah, all right. Just take a look at Sony Futures. You know, when these Sony Futures dropped on expectations, the Bank of England was going to have to hike interest rates more quickly, right? The Bank of England met and said, no, we don't know what the rates market's thinking. The rates is ridiculous. You know, rates market's got it all wrong. We're not thinking of hiking interest rates at anywhere near the pace they are. So then we saw Sony Futures markets move higher. We are since seeing a little dip lower. So if we see inflation surge, say it comes in like 5% plus now, then that might be enough to move the Bank of England. So that will raise expectations of the Bank of England hiking interest rates. So like at the December meeting. So if this comes in like above, like say 4.4%, then expect the pound US dollar pair to surge higher, right? And you'd be looking for a potential move in the pound US dollar, you know, back up to sort of that 1.3550 region. So watch out for that if we get very high CPI data. But as I said, just high CPI data, the Bank of England is going to look through it because they've already said they expect it to be 5%. So it's only if it's so high that markets think, oh, the Bank of England will have to hike rates next month. Now, Canadian CPI, again, the outlook for the Bank of Canada has been very optimistic recently. The Bank of Canada made a more hawkish tilt in their last interest rate meeting. So again, anytime you've got to just be aware the US energy, not sure what's going on, just go along to Central Bank Watch, pick it up, and then see where was the last Bank of Canada meeting. You can see here was the last Bank of Canada interest rate meeting. Unusually, I haven't got it here. Let's just see, it may have been refiled under the wrong section. Let's have a look. Yeah, there we go. So that was the Bank of Canada left rates on hold, but they ended quantitative easing and brought rate guidance forward to the middle of quarter of 22. So that was supportive for the CAD and should continue to be over the medium term as long as oil prices don't collapse. So with oil prices dropping, the CAD's seen a bit of weakness today. So they're on hold, they've ended quantitative easing, and they're expecting rates to rise by the middle quarter of 2022. So that's where they're at. So that means with the CPI reading, if this comes in very low, then they're less likely to move to raise rates. So expect downside in something like CAD, okay, and that'll be upside in US dollar CAD. Yeah, that would be one thing to look at. So that's what we expect for CAD. Got a few Fed speakers. Now, what we're going to look at for the Fed speakers is look for these Fed speakers pushing back against the recent surge higher in US inflation. If they push back against the idea of earlier interest rates, then that should be negative for yield, negative for the dollar, positive for gold. Okay, so look out for that. And we've got a whole range of speakers. Now, what you need to look for when you're looking for a speaker is you need to see what their bias is. So I've got a little list here of their biases, and you're looking at, you know, are they hawkish, are they dovish? And by using like, you need to find out what they are. So if we look at Fed's Williams, for instance, let's just take a look at Williams. Where is he? Where is he? Here you can see, okay, Williams, he's vice chair, he's dovish. So in other words, if Williams comes out and says something like, oh yeah, we may have to raise interest rates more quickly, that will be seen as a hawkish comment, and that will have impact because he's changed from his dovish view. So when you're trading central bank speakers, what you're looking for a speaker that changes from their view. So Williams is dovish. So the impact will come from him saying something hawkish. Now, if he says something dovish, no surprise, no trade. We're looking for someone saying something more, you know, unusual. So let's look at daily. He's another one of the speakers. That's daily, daily, daily. Neutral. So this will be helpful, right? 2021 voted. So if daily says something really negative, okay? So in other words, you know, there's no way we'll be rising interest rates. It's too soon to raise interest rates. You know, despite the last US CPI, that would be like negative for the dollar and positive for something like gold. So watch out for those flurry of FOMC speakers to move the dollar and precious metals. And you've got similar on Thursday, right? Okay, so you know, you might think, oh, I'll just ignore these. Don't. And the Fed is the world's leading central bank, has great impact. Friday, we've got a sort of quiet end to the week with some more Fed speakers. So really, it's going to be Fed speakers and this Australian wage data is going to be key. So look out for that on Wednesday. I was going to go back to my major trades. So that's Wednesday coming in overnight. I want to show you what's going on here with the Australian dollar. Understand this, and you'll understand what the potential opportunities are in the Aussie. So you should here see the COT report. Now the COT report is the commitments of traders report, and it lets you know what markets biases currently are. What you can see here is that the market is biased to short the yen with both large speculators, you know, asset managers, larger funds, and leverage funds. So that's your big, you know, your short-term trader. So look, both short-term and medium-term traders are short the yen, short the Aussie, and they are expecting that weakness. Now, traders have been short the Australian dollar for a long time, and it's because of like iron ore prices have been falling. There's been, you can see, just see here, you see this is the fall in iron ore prices. The iron ore prices dropping. Australia exports about 25% of their entire exports is iron ore. So when iron ore prices drop, it's like a wage cut for the Australian economy, right? So that's pressure to the downside, and like, and a lot of that iron ore is used by China's steel production. You can see, look, China's steel production weakest since Feb 2018, you know, low, below the 6-year average, 2021 dropping. So all of that is negative for the Australian dollar. And we've had like COVID cases in Australia, all those lockdowns in New South Wales and Victoria State, all of that weighing on the Australian dollar, slow down in growth in China, yada, yada, yada. There was good reasons to sell the Australian dollar. Reserve Bank of Australia keeps saying we won't rise interest rates till 2024. It's Aussie weakness. Now that has now reached peak bearishness. In other words, so many people have been so short for so long that, like, you know, it can't really get much worse for the Australian dollar. You kind of think this has all been priced in. So what we're looking at here now is if the Reserve Bank of Australia, if the wage data, right, the wage data that comes out on Wednesday is strong, the Reserve Bank of Australia have said that inflation and wage data is very important for them. So if that does come in high, then we could see a rally in the Australian dollar. So one potential pair to be looking at would be the Aussie CAD upside. Okay, so potentially Aussie CAD upside looks interesting. If oil keeps falling, then we'd expect the CAD to be weaker, and you might see some upside in the Aussie CAD. So watch out for the Aussie CAD on strong wage price data. Now, the swing trade you want to look at, and I put a very quick summary of this on Twitter. So here, I'll just send you a link. This summarizes this outlook very simply. And if you're not following me on Twitter, follow me on Twitter. You can see at Giles Coughlin CCA, I do put up quite a few updates through the week. And, you know, that's one little facility that I do have. So if you're not following me on Twitter, do follow me on Twitter. But let me just quickly outline to you the New Zealand dollar yen upside trade. Now, I've been flagging this for a while. We looked at this last week. Now, price has since moved into that key support region at that 80.20. That's where I was looking to go long. We've got bond yield spread between the, let's get rid of that. Let me just put this is the New Zealand 10-year bond yield spread, Japanese 10-year bond yield spread. See the bond yield spread pushing higher. Price tends to follow the bond yield spread between the New Zealand 10-year and the Japanese 10-year. So look, the Bank of New Zealand's meeting November the 24th, they're expected to raise interest rates. They are expected to maybe move by 50 basis points. ANZ Investment Bank see them moving to 2% next year, Westpac 3% in 2023. They've got the highest inflation they've had in 10 years. They've got some of the best employment data they've had in about 14 years. So the RBNZ is also the central bank with the lowest, so with the highest interest rates at the moment, and they look set to rise. Now, the Bank of Japan, by contrast, is expected to not hike interest rates for the foreseeable future. They've still got deflationary pressure. They're not expected to move. They're still using quantitative easing, because the RBNZ has finished their quantitative easing. So there is now what's called a central bank divergence. Now, you know, obviously, I was trading this into this upside, took some profit, now looking for a retracement. So I'm back in that obvious level. You see that previous high broken? That's always going to be the place where buyers are going to step in, right? So buyers have stepped in. You've got stops running just below 79, looking for potential move up to 82. Now, a couple of things to say here. What could change this outlook? If there was a lot of risk-off trading, you see some yen strength. If there was a bad outlook for New Zealand, either surging COVID cases or a total turnaround of policy by the RBNZ. But the RBNZ are not expected to meet now till the 24th of November. So that's like 9 days. Typically, you do see markets rally into these events because you're expecting interest rate hikes, right? You've heard that buy the rumor, sell the fact. This is how markets work. They move in anticipation. And one of the last central bank, the RBNZ, hiked interest rates at their last meeting, and the New Zealand dollar sold off. Why? Because it's buy the rumor, sell the fact. People like to buy the New Zealand dollar into the central bank meeting. And if they don't say anything more hawkish, then you wouldn't expect the New Zealand dollar to keep rallying. But right now, this is a sensible place where you can go long. Stops could be put just sub 79, looking for a potential move back up to that 82 region. Okay, folks, that's the major outlooks that I have for today. Don't forget to follow me on Twitter. I'll try and keep folks updated with anything really interesting I see. Aside from that, alongside precious metals, don't forget silver. Silver's looking beautiful. And you can see a really technical, beautiful head and shoulders pattern here on the weekly and the daily chart. You see left shoulder, right shoulder, neckline. You know, I think, I'm not sure, it may have been Warren that pointed this out to me. And you've got a break here, looking for a potential move back up to 28. Okay, see that break last week? So it's closed above the level. Look at this daily chart. If you get a weak retail sales, that could be the trigger to go long. All right, so watch out for that. Good potential opportunities in silver. Folks, it's been a pleasure. Hope everybody is doing well. Hope that's been helpful. Hope that's got you ready for the trading week. I hope you all have a really good week. Yeah, thank you, Warren. Have a good one. Josh, Johan, you too. Vladimir, Suneth, Jabin, Chris, good to have you all. Thank you for coming along, and I look forward to keeping you updated. Take care. Have a very good trading week. Thanks, guys. Bye.